Today, where air cargo really is, how we got here, and where the smart money's going next. Joining me are two experts who know this market backwards, Tom Crabtree and Robert van der Weg.
It's been a roller coaster year. I mean, every month there's something new.
There's some markets out there that are booming, and there's markets out there that are just really struggling.
Yeah, I think that's a relatively easy bet. Yeah, I would vouch for that.
You are listening to the Freight Buyers Club. This podcast is brought to you by your host, Mike King, and produced in partnership with Demerco Express Group, a global 3PL that specializes in managing logistics to, from, and within the Asia-Pacific region.
Hello, one and all. This episode is brought to you by Demerco Express Group and Mike King, and welcome to the Freight Buyers Club. And with no further ado, to my guests. First up is Robert van der Weg, CEO of Mexico-based MAS Cargo Airlines. Robert's career in air freight spans KLM, Atlas, Airbridge Cargo, Cargo Lux, and a breathless ECS group, basically a who's who of the air cargo sector. Earlier this year, he took the top job at MAS, where he deploys a fleet of freighters across Latin America, the US, Europe, and China. Welcome back, Robert.
Thanks, Mike. Appreciate it.
And joining Robert is Tom Crabtree, Managing Director of Transport Research Advisory, a freight consultancy based outside Seattle. Before launching TRA in 2023, he spent over 20 years of Boeing commercial airplanes and authored the Boeing World Air Cargo Forecast. These days, he also contributes to Drewry's Air Freight Insight. Tom, great to have you with us.
Thanks for having me again, Mike.
Okay. You're both very welcome. Let's turn to where we are now in air cargo. Tom, you're close to the data every week, particularly with your work through Drury and others. So let's start with you. Give us the dashboard overview. What's happening right now in terms of demand, capacity, and rates?
Well, so far this year, on a global scale, my air freight's grown about 3% up through the end of July of 2025, year to date compared to the first 7 months of last year. That's a substantial deceleration compared to in excess of 11% growth last year, led by two different phenomena. One being the e-com boom out of China to North America and Europe and other parts of the world, but also the big boom in the biggest, fastest growing market was actually Middle East to Europe, as shippers grappled with the shutdown of the Suez Canal, or the severe restriction of the Suez Canal, I should say, in container ship transits. And something like 9% of ocean capacity was withdrawn on a global scale simply because ships had to transit around the Cape of Good Hope. And therefore, a lot of shippers couldn't live with that. So there was a huge boom through mostly Middle East airports, particularly Dubai, transiting cargo from Jebel Ali container ship port to Dubai World Central, Dubai Airport. So those two phenomena really pumped up cargo last year, and the comps became very difficult this year. So what's interesting is that with the return of the Trump administration here in the United States, there were a lot of pundits predicting that air freight would collapse. All container ship, or I should say all e-com traffic that air freight had picked up in 2023 and 2024 would defect to ocean. None of that happened.
And just to interject there, Tom, if you're watching us on YouTube or Spotify, you can see the Drury chart now, which shows global air freight traffic growth month to month this year. So Tom, that shows lurches, but not really a slowing year-on-year trend. So how do you read that? And please continue your analysis.
Well, it's not been the same for everybody. And I think Robert will agree with me. There's some markets out there that are booming, and there's markets out there that are just really struggling. But on an aggregate scale, the market is still expanded just barely 3%. Capacity is expanded about the same rate, about 3% in available cargo ton kilometers, both packs, bellies, as well as freighters. And rates, compared to the ocean market, air cargo has been fairly steady Eddie. But that's not true for all markets, particularly outbound out of Asia to North America. Rates have fallen quite a bit starting in the second quarter of this year through roughly the mid third quarter of this year. So it all depends on where you play in the market and what markets you serve. So if you look at the visual in terms of traffic, you'll see that the traffic patterns since January have been very erratic. It was very weak in January. It went negative in February, and then it rebounded in March and April. May wasn't horrible, but June was pretty anemic. And then May bounced back to roughly 5.5% growth. And anecdotally, two other industry observers have pointed out preliminarily that August was somewhere between 3 and 5% growth on a global scale. Again, it all depends on where you play in the industry.
And Robert, from the operator side, does what Tom describes line up with what you're seeing day to day in terms of yields, load factors, booking behavior? Heading into the traditional peak season, does this feel like a plateau versus this time last year or something softer?
Well, of course, you have to know that we are more of a niche player. I mean, our scheduled business network is basically connecting, North America to South America. So as Tom rightfully pointed out, I mean, it really depends what kind of operator you are. If you're a global operator, like my ex-colleagues at Cargolux or Atlas Air, what's amazing to see in this year is that if one market goes up and another one goes down, almost simultaneously, these guys can adjust their network. So as Tom pointed out, China or Asia to the US has been very volatile. I would say generally relatively weak, particularly because of the minimis abolishment. Now, at the same time, the Asia to Europe market has been very, very strong. So those operators that have the ability, meaning in terms of traffic rights and commercial grip, to shift capacity, they will see that this year is probably, a reasonably good year compared to last year. For those operators that are more in a niche, it can be a very different situation. As far as we're concerned, generally, we've been doing okay. The biggest issue we have had is the subdued automotive sector, which has been always a strong driver of our network, particularly between Mexico and Brazil. And we've seen that the automotive industry has been disproportionately hit. At the same time, we do see right now that, things are starting to come back. Because at the end of the day, of course, life goes on and production goes on. But I think a lot of companies push the brake in this specific segment. So to your question, it really depends, from what perspective. I think we're probably somewhere in the middle. We're not the guys that are able to equalize everything, but we're also not the type of operator that was, disproportionately hit. Of course, we had to apply a lot of flexibility and agility to, in our network to keep things going because, we had some stressful weeks with all the ups and downs. But I would say so far, so good.
How does this compare to what you were expecting when you took the job?
Oh, I cannot begin to analyze that really. I mean, it's been a roller coaster year. I mean, every month there's something new. I mean, of course, the tariffs has been the overarching topic, which, has been a moving target, but also the geopolitical issues that have been playing a part. But then again, I mean, this year may be disproportionately crazy, but as long as I've been in this business, it has been crazy, right? So this is also the nature of air freight because air freight is serving that role, right? To basically equalize the supply chain problems in the world. So actually, bizarrely, all these disruptions are actually benefiting air freight. But if you're running a business like this, it's tough, and this year has been disproportionately tough. But it's fun as well, we thrive by that.
Okay, there's the picture today. A tough year. Demand is holding up okay-ish, depends on the sector. Rates under pressure, but not as bad as some predicted. Some capacity move arounds. We're going to look at all of that in a moment, but let's first look at how we got here. Tom, let's walk through what we've seen in 2025. 2024 we had this big e-commerce surge, then we had the Red Sea diversions. That's all fed through into this year. Plus, then we've had these policy shocks out of the White House on tariffs, on de minimis. We've had a lot of trade rerouting. What are the 2 or 3 levers that really shaped this market this year?
I would say, Mike, it's the agility of the air cargo industry, particularly the freighter aircraft industry, to pivot as necessary to put capacity in place where demand is actually stronger. And as a consequence, we've seen, like with the U.S. trade policy, for example, this year changing on a regular basis, a lot of large wide-body freighter operators are redeploying capacity on those trade lanes where demand is strong. So China, not surprisingly, is refocusing a lot of its export efforts on those markets that are more reliable than the United States. So one of the strongest market year to date so far in 2025 is Far East Asia to and from Europe. And then you also have in there intra-Far East Asia and a couple of others in terms of the transit markets through the Middle East. So it kind of goes back to, if I may add or throw in here, earlier this year, the late Fred Smith, founder and former CEO of FedEx, was saying that he wasn't terribly concerned about the trade war simply because trade finds a way. It's like water in a river. It hits a rock, it goes around. Traders will keep trading. So in terms of capacity, large wide body freighters are a big part of it, and as well as medium wide body freighters, particularly like those that Robert operates, A330 freighters. I think you're all conversions, correct, Robert? So
Correct.
it's a big deal, being able to be flexible. What I will say, what is another lever? There's a tough one. I would say that pax belly capacity, a lot of folks rely on that simply because it can often be priced lower than freighter capacity. But in aggregate, and all things equal out, in my opinion, if you look at it longer term. And the other thing is that freighter capacity is always prioritized for shipper needs. Pax belly capacity is not. So pax belly capacity at an aggregate level is fully restored, but because of geopolitical tensions, no, it's not. If you look at the big freight markets where it's needed, particularly outbound Asia to and from North America and outbound Asia to and from Europe, because of the closure of Russian airspace to a lot of carriers since the onset of the Russia-Ukraine war. So there's a heightened need for freighters in those the two largest air cargo markets in the world, outbound Asia to North America and outbound Asia to Europe.
And is this what we're seeing in freight markets, Tom? Are we seeing that cargo is firing away and operators are following it, that the capacity is moving around efficiently, and that's what stopped this cratering of air cargo rates that some people were predicting?
Yes, and I would also say volatility in container ship markets is benefiting air freight. The interesting thing is that with the onset of Trump tariffs in early May 2025, there was a huge spike in container ship rates. Okay, there were a lot of sailing, and there were blankings of strings in container ship sailings. So if you're a shipper and you have to pivot, who are you going to call? You're going to call people like Robert to take care of you. You have to. So I'm going to point out that more than likely the past will repeat itself in the near-term future later in this podcast.
Yeah, I mean, the difference between the shipping market and air cargo rates is very pronounced in terms of one's being like a roller coaster and the other one's way more steady. And who'd have thought that it was air cargo that was steady? For anyone listening, please check out the next Freight Buyers Club, because we've got Lars Jensen, shipping's best analyst, on, and he's joined by Niels Roche, who's very recently left a major carrier, and he's going to share all of his insights from that position with us. So that'll be available next week. Robert, I think Tom might have answered a little bit of the next question I was going to ask you. It's about, you were explaining last time we spoke on the Freight Buyers Club that the wide body freighter market was tight, like with conversion delays, lack of fresh capacity, some of the things Tom mentioned in the market. This is playing out okay for you then?
Well, it has two sides. It's okay in the sense that it holds the supply-demand ratio steady, which as such is in general a good thing for us. On the other hand, it prevents us to grow efficiently, right? So those are the two sides of the coin. So I would still prefer that there is a bit more capacity opening up, because as far as our mass is concerned, we need to grow our fleet. It's very important. It's all to do with economies of scale and building the network. Keep in mind there's inflation around us, so unit costs are going up, and of course we have to follow the yields, but the yields are largely driven by factors outside our control. So the way that we can control this ourselves is to grow and to kill this unit cost increase by doing that. So it's got two sides, Mike. It's got a pleasant, like everything in life, it's got a good side and a bad side. I prefer it to be opening up a bit, to be honest.
Can you just give us a little bit of an insight into how you've been deploying your capacity this year in relationship to some of these changes we've seen in the market? Where have you been looking for opportunities, and has your cargo mix shifted substantially this year?
Well, I think I can say two things about this. First of all, with our clients in China, we've been working very closely on opening up the network beyond Mexico itself. Let's say up to early this year, There was so much Mexico e-commerce that our Chinese customers were fine to just use Mexico as a final destination. With all the changes, first of all, US operators expanding their capacity into Mexico because of the issues with the US. Secondly, Mexico has been imposing their own tariffs. So people are complaining about the US government, but many other governments are doing similar things, or at least contemplating them. We have opened up capacity beyond NLU. So our Chinese customers are now also loading with us much more to places like Bogota or Brazil or Chile. Second thing we've done, because of the automotive weakness, we've been opening up secondary stops on our southbound network. So instead of just flying to Brazil, we add a Chile stop. Instead of just flying to Quito, we add a San Jose stop. We added Panama stop. So it's basically dealing with this weakness. So you're basically adding costs to an operation, but clearly you add more revenues by doing that. So these are two main things that we have done to deal with the situation.
And okay, well, thanks for that, Robert. On those opportunities, let's just have a little peek forward. How do you see peak season this year? Have you got high expectations for mass? What's your take on your key markets that you've just been outlining there?
Well, as Tom pointed out, I mean, life always goes on. So particularly the automotive market, which is important for us, we do expect that we're going to see a rebound. Actually, we see already the first signs of that because, manufacturers can slam the brakes for a while, but the consumer doesn't care. In the end, the consumer goes on and demand will catch up. So, I mean, our peak season is mostly set because our operation to China is based on charter operations. So we're not going to benefit from any upside, nor are we going to, be hurt by any downside. Our biggest upside lies in our scheduled business network. It's particularly between, let's say, North America, Mexico, and South America. And the key driver here will be the automotive segment. I'm optimistic. I think we're going to see a surge. We see the first signals. Secondly, the flower market, our northbound market, is still very resilient, and also there we are optimistic. So, the consumer goes on, keeps buying, and a period of negativism on the consumer side is always followed again by a research because the surge, because again, life goes on. So we think we're going to see the good side of the relatively weak summer in our markets this winter.
Tom, what's your view on the prospects for a Q4 peak season, which for those who aren't familiar with air cargo is when we normally see the traditional air cargo peak season to build up into the holiday period. How does that look globally in your view? And is it a different picture in the US due to tariffs and other factors?
Loaded question, Mike, but here goes. Okay, so Robert, cut me off if I'm wrong, but peak season, the traditional peak season for the big world air cargo industry starts roughly about now through mid-late November, correct? And for international movements.
Correct.
So here's the deal. Air cargo is a niche industry, both within air transport and both within freight transport, as well as air freight transport. And I want to emphasize to our viewers that, particularly those who play in the air cargo industry, we are very small compared to the ocean markets, especially the container ship industry. And that industry, in terms of pricing power, is now struggling. And that's going to provoke a reaction. So, for example, in May, rates spiked somewhere, I want to say $3,000-$4,000 per 40-foot box. Or what is that, a 12-meter long box for those of you thinking metric? So here's the deal. Those rates have been sinking over the summer. The container ship industry wants to make a profit. They actually have a lot of pricing power because they have a much stronger sense of, how should I say, signaling one another to raise prices. So they're going to start cutting capacity because prices have fallen below $2,000 per 40-foot box on a global scale. They want to make more money. They're going to start canceling services. When that happens, shippers are going to run out of options. And as a result, air freight will benefit when things start to pick up, probably in the next, I would say, 2 to 4 weeks. So air freight will probably have a peak season, may not be the biggest one that like they've ever seen. It'll probably not be as strong as 2024, but it will be a peak season. And I think it will be a bit late. That's my prediction.
So Tom, but some people, what they say when ocean freight rates are high that benefits air cargo because the price differential between the modes narrows. But you're saying in this peak season, you think it'll be, even though ocean prices are fallen, that air cargo will still benefit anyway,
Well, so
just because of the cancellation disruption and the time.
yeah, it's going to pivot to service. That's the problem for shippers from their perspective. And we at Drury, we focus on that pretty much as on the kind of looking at it from a shipper's perspective. And if ocean carriers decide they're not making much money, to raise prices, they reduce capacity in basic Keynesian economics, right? So that's probably going to happen this peak season. And as a consequence, when service starts to falter on the ocean side, I mean, there is a number of folks who track reliability on the in ocean markets, and recent numbers show that reliability numbers are faltering mid-2025. And shippers buy air freight not only for speed, but for reliability. That's the value sell of air freight.
And on the end of the de minimis exemptions that we're thinking is going to affect the e-commerce sector quite heavily, especially into the US, because it's the minimum exemptions were originally against China and Hong Kong ended, and now that's been extended to everybody. But we haven't seen that in the rates. If you're watching on YouTube or Spotify, you'll see here China, US lane rates have stayed surprisingly steady. So will the end of de minimis, will that kick in, and will those rates start showing that, do you think, or not?
Pertaining to e-commerce, I would say what I'm hearing is that there are, again, it goes back, I'm hearing rumors that, and people are kind of tight-lipped about it. I'm hearing just kind of like vague descriptions of what they're doing, but they're repackaging and doing different forms of consolidation to meet the letter of the law in terms of U.S. importation requirements. Again, it goes back to what Fred Smith of FedEx said. Trade finds a way. You know, if there's a block, people put up a roadblock of some kind, trade finds a way around it. Eventually, it happens.
So the solution is tariff workarounds.
Yes.
I'm getting adverts from Temu and Shein saying we are now available in the UK. So I presume that they've shipped a load of stuff to warehouses in the US as well, and by ocean, and they're going to start with different distribution patterns, do you think, or not?
Absolutely. We're seeing that right now. In terms of basically the transpac market being as weak as it has. What's interesting is that, the air freight transpac market in May, with the onset of the new Trump tariffs and the end of de minimis with respect to China and Hong Kong, which is the biggest origin of de minimis traffic coming into the United States, it fell like 10, 11%. And then the contraction continued in June, but it was only down about 4.5% to 5%. Then in July, it was only down 1% relative to 1 year prior. So I predict that when IATA publishes their traffic statistics for August in the coming days, here in late September 2025, we're probably going to see a positive transpac number. We'll see.
Okay, big call. Okay, well, how about other origins, Tom? Are we seeing Chinese exports being rerouted? You've sort of touched on some of this, but what's going on in India, Vietnam? How about Taiwan into the US, North Asia into Europe, Latin America into Europe? Where's exciting right now?
Well, Vietnam is obviously a focus of Chinese foreign direct investment. So that's a big booming market since the onset of all this uncertainty over this year. But I'll give you an anecdote that goes back to the first Trump administration. Back in 2018, with the onset of the first Trump administration tariffs, when I was still working at Boeing and we were sitting down looking at U.S. trade data and released by the U.S. government, we noticed that Canada became a big air cargo exporter to the United States in the second half of 2018. Now, was the Canadian dollar weak? No, not as weak as it could have been. So yes, workarounds are out there. They do happen. Canada's a nice place, but it's not a big booming air cargo export market.
Robert, what's your take on the most exciting origins, or perhaps you can come in on the US end in de minimis exemptions with your view on how this is impacting global freight? Take your pick.
Well, I think, first of all, on your earlier question, also on the transpac market, what happened there? Actually, some people have been complaining, some operators have been complaining about the fact that, US operators got all these great traffic routes, right? So In general, the US operators have a big advantage, where they can fly. But this year we saw the definite upside of that, because if all this capacity between, of Atlas Air, of Calita, National, would have been restrained to the transpac market only, I think we would have seen a bit of a bloodbath over the summer on the yields. But because they could redeploy the capacity to Asia, Europe markets, because they have this ability to do that, actually the net effect was rather limited on yields. And I think it's a big tribute to the air cargo sector, on the flexibility, on all the people in those companies, and how they can manage that. I mean, it's simply amazing, because this was such a big external shock. If low value e-commerce drops by 40%, almost from one day to the next, and the industry is able to deal with that this way, I think it's really, really impressive. On the other question, I think Vietnam is the big thing right now. So Vietnam and Southeast Asia. In the early 90s, it was all about Malaysia, Singapore, and Thailand, where all the high tech and all the stuff was coming from. It all got relocated to China. I think we're currently seeing a reversal. So I put my bets on the Southeast Asian market for next year, for this year already, but particularly for next year. And I think they will really benefit, particularly Vietnam, because as Tom pointed out, its proximity to China. One thing that we didn't talk about yet is a new factor, right? And we talk about sea and air. How about rail? So rail has been a big growing part of the capacity between Asia and Europe. Why I mention this is that since 2 weeks, there's been geopolitical issues on the border between Poland and Belarus. And
Very good point. Yeah.
This is the next thing. So this route is being closed, and this will be another bullish factor for the peak season between Asia and Europe. But of course, once capacity is sucked into that market, it will have a repercussion on the other markets.
This is the closure of the Belarusian-Poland border, yeah, because of problems with NATO and Russia.
Correct.
How does your analysis of that, Robert, how's that feeding back into the decisions you're making for MAS?
Well, what we are doing is we're really opening our sales network in Southeast Asia. I mean, traditionally, we had our interline partners mostly in North Asia. Currently, we're pushing hard to open up our sales channels in Southeast Asia, so that we can, even though we're not flying there ourselves, we can benefit by people interlining through LA or Mexico. So this is the part we can directly influence.
Can you just give us some insight into, let's call it, I think I called it last time you were on the Diary of an Air Cargo CEO. Let's stick with that. How do you make decisions when you've got so much fog? So fog being tariffs, compliance, I don't know, currency, fuel pricing. But when there's a big change, what's your 48-hour playbook? How do you go about pivoting capacity based on things like, or changing your pricing? Can you explain how that process works?
Well, I think it's two things. I mean, it's first of all data, but data, of course, gives you only the past, but it's a good start. And then from there on, it's mostly intuition. I mean, being connected in this business, speaking to customers, and based on experience, making your decisions. You cannot always get them right, but as long as you get them right, 7 or 8 out of 10, you're doing reasonably well. I mean, if we would all know what would happen, we wouldn't be meeting people like us, right? So it's a lot about intuition and experience, but definitely data driven.
We'll just take a short break. We'll be back with you in a second.
This podcast is proudly produced in partnership with Demerco Express Group, a trusted provider of global shipping and contract logistics services in Asia, Europe, and North America. Demerco's particular strength is in Asia, where it gives shippers the freight capacity and local market expertise to streamline freight movements to and from the region, particularly for trans-Pacific lanes. With 130 forwarding and logistics locations across China, India, and Southeast Asia, Demerco connects Asia with the world like no other global 3PL. You are listening to the Freight Buyers Club.
Okay, let's have a look at what happens next. It's our lightning round. It's new on Freight Buyers Club. Tom, peak season. So your call, mini peak, late peak, or no peak?
Late moderate peak is my short answer for the reasons I've outlined. The ocean market is really struggling in terms of maintaining pricing. When that happens, the big liner companies tend to restrict capacity. They blank sail, as it were, as a term in the industry. to bolster pricing. When that happens, service levels falter for shippers, and air freight will benefit from that. Probably later in the peak seasons, probably starting in October is my prediction. I do predict that pricing, air cargo pricing in aggregates come down somewhere between 3 and 5% world average general freight rates this year relative to last year. But container ship rates are double-digit percentage down compared to this time last year. So as a consequence, with all the volatility you see in ocean, we're going to see, I think, a moderate late peak. Not as strong a peak last year for certain. That's certainly not going to happen. But I think we'll see a moderate peak this year.
Okay, I think that sort of circumvents my next question, which is about spot rates in the next 90 days. So how about the spot rate in the first quarter of next year? Sideways, down another tick, or a bounce on key lanes?
Well, I'm going to take the fifth on that one because the uncertainty with U.S. trade policy I thought would start to abate by now, but it has not done that as of September 2025. I think the uncertainty will continue to play out into 2026. There are a number of different reads in terms of data out there. As Robert has pointed out in this conversation, his business is very heavily dependent on the automotive sector, and he's seeing some positive signs of life in that industrial activity. Besides e-com and fast fashion and completed, consumer electronics, the air freight industry relies heavily on industrial support mechanisms. And what has really been missing the last 3-4 years is the industrial market bolstering air freight. This is on a global scale, not just for, say, Robert, but in Europe in particular, but also in the United States. So here in the U.S., we had a rate cut in terms of interest rates last week, which has sent the stock markets booming. But we also have a weak jobs market starting to emerge. So taking that in stride, barring a...
Are we saying 2026 stronger than 2025, Tom?
It is potentially possible. The capacity needs to be there.
Possible.
Boeing and Airbus need to deliver more aircraft into the aircraft system for that to happen. And principally, when I say that, passenger wide bodies and their associated bellies, as well as freighters. So, and the only place to get a large wide body freighter these days is a 777 from Boeing, and now a 777 conversion from IAI in Israel.
Okay, and Robert, for you, you don't need to take the fifth on this one. Do you think Liverpool are going to win the league?
Yeah, I think that's a relatively easy bet. Yeah, I would vouch for that.
Back on the business.
That's very good news, right?
Yeah, but is it time? How do you view what's your fleet plan? Yeah, you're still looking to expand. Is that how you're looking at 2026?
Yeah, most definitely. I mean, as I explained, we need to grow. Simply because of economies of scale. This is not a decision you take just by looking at tomorrow's market. This is a decision you take structurally, right? In fact, in the ideal world, you execute this decision when markets are weak and not when they're strong. But then again, you cannot always get this completely right. As much we need to grow. We need to bring down our unit costs and grow our network. So and then it's just about how to execute that decision. So if we have an opportunity to grow next year, we will take it, because there's no point to say when are we going to do it exactly, what moment in time, to get it completely right, to get it completely coincide with the weak market, and you have better buying power over the lessors. So yeah, we will need to grow. We are optimistic about the market. We believe that again, after this shock of tariffs, things will settle down. There's still generally capacity shortage. Geopolitical unrest, I think, is likely to remain. So yeah, e-commerce. We spoke about the US minus 40%. But what we didn't speak about is that despite that, global e-commerce is still up by about 30%, despite this, right? So, we're talking about growth markets, Latin America, Africa, Middle East, Europe. There's still so much push, for air freight capacity.
Latin American market still to grow next year then?
Yeah, I would definitely think so.
And one bet you'd make on a city pair for 2026?
Hanoi, Los Angeles.
Hanoi, Los Angeles.
This Mexico.
Gentlemen, thanks for cutting through the noise. Takeaways: demand isn't falling off a cliff. Rates are telling us a few mixed messages, but so maybe plan with humility there. Opportunity lives where you're fastest on the pivot. Big thanks to Demerco Express Group for supporting the show. And if this helped you sanity check your budget, share it with a colleague and subscribe. That's it for today. Tom Crabtree and Robert van der Weg, thank you very much for joining me. It's been my pleasure.
Thanks a lot, Mike. Thanks, Tom.
Thanks, Robert. Daku.
Keep it up, man.
Mike, thanks for having me, and I hope this was insightful for all your listeners.
Thank you, Tom. Much gratitude as ever to Karen Ball and Tom Matthews for their production skill. We'll be back soon. I'm Mike King. Thanks for listening to the Freight Buyers Club.